In this video, I'll discuss Q1 FY26 result and Concall of Indiamart. So Indiamart is a B2B online marketplace, just like Flipkart and Amazon, who are like B2C online marketplace where we retailers buy our product. Okay, and in Indiamart, the businesses buy their product from another business. Okay, so that is Indiamart. And for an example, if I give you an example, let's say you have a garment shop in your village or your town. Okay, so if you need 100 garment, 100 t-shirt, so you can go to Indiamart's platform. You can say that I need that. You can give the specification that that kind of a t-shirt I need. So Indiamart will suggest you, will give you the options that 10 15 sellers they will give you. So you can compare the prices, you can compare the product on the app. So that is how you can buy the t-shirt. And what is how it helps you, like if you are a buyer, you can compare the quality, you can compare the prices, what the sellers are giving you. So it is a very good model, that very good model for a buyer, that you are getting the whole specification, whole like what is the price, you can know from multiple sellers. So that is the point. And how Indiamart earns money from their business, like they take a fee from the suppliers only. Okay, they pay, they charge a monthly, yearly fee on the suppliers. Okay, that is how Indiamart earns money. Let's say if you are a supplier, if you pay Indiamart the fee, then Indiamart shows your storefront on the top. Okay, so that is how they promote your storefront. So that is how Indiamart earns money. Okay, and if I talk about the geography of buyers and sellers, 47% buyers are from less than tier 3 cities. Okay, and 53% sellers are from metro cities. So we can say that Indiamart is connecting rural India to urban India, because 47% buyers are from tier city or less than tier 3. Okay, and the main sellers are from the metro cities. So that is the thing Indiamart is doing. Okay, so if I talk about the main parameters, that what we should look at in Indiamart, that how the business is going, so one of the main thing is repeat buyers. That why repeat buyer is very important is like, for an example, I am a buyer. Let's say I am a buyer. Okay, buyer on Indiamart. So if I need just one product, okay, if I buy just one product, I would go to just one seller. Okay, I would buy from just one seller. Whereas let's say if I am buying 10 different product, then at the end of the day I would like I'll end up buying from 7, 8, 9 different sellers. So if a buyer is buying from 7, 8, 9 sellers, whereas in the first example a buyer is buying from just one seller. So if the second story happens, what would happen, that more and more seller will get business from Indiamart, and that is how they also will be encouraged to pay the platform fee and get promoted by Indiamart. And that is why the repeat buyer number is very important. So that is the thing. And if I talk about the repeat buyer number for Indiamart, that is in Q1, that is at 58%. And if I talk about the last year, that was at 53%. And if I talk about the history of repeat buyers from after COVID, this 58% number is the highest in Indiamart's last 2-3 years. Okay, so that is a really good thing, that repeat buyer number is going up. So that is a good thing that this is happening. But if I talk about the number of paying supplier, in terms of the number of paying supplier, in this quarter the parameter grew by just 1%. That is a negative thing, that if the number of paying supplier is not increasing, then how IndiaMart will earn more and more revenue? So that is the thing. So this point is little bit disappointing and very disappointing, because if the number do not grow in the future, then how much they will increase their ARP? So that is the thing. And thus next is average revenue per paying supplier, that how much revenue they are getting from one supplier. Okay, because the model is like supplier will pay the fee, and that is how they will get featured on the top on IndiaMart's app. Okay, so if I talk about the ARP paying supplier, that grew around 9% in this quarter, which is a good kind of a growth if we look at it. So that is the thing. In this quarter, that grew by 9%. Quarter on quarter, it grew by 2.5%. But again, the thing is that the main thing is that how they are able to increase the number of paying suppliers, So that is the most that is a main thing, because ARP will grow around 7, 8, 9% only. You can't increase your platform fee by like 20%. It is not going to happen. So we can't expect it to grow at a higher pace. But if the paying supplier growth do not come in the future, then there will be some kind of a problem in terms of revenue. And if we look at now also, in terms of the revenue, that grew by only 12%, and that is mainly driven by the ARP paying supplier. Okay, so that is the thing. And in terms of the paying supplier also, that is there is another thing which is like pretty bad, that 10% of paying supplier contributes 50% of IndiaMart's revenue. So that is not a good thing, that only IndiaMart is dependent on just 10% suppliers. Okay, for their 50% of revenue. If like 1-2% supplier stop giving the platform fee, then there will be a big kind of a issue in terms of the revenue. So that is the thing. IndiaMart should look at it and should improve it further. Like for 10%, it can be 30, it can be 35, but the number should get lower towards like 30, 35. Okay, so that is the thing with concentration. In terms of the total supplier base, the total number of suppliers listed on IndiaMart, that grew by 6% in this quarter. So that is a thing, that if you look at the paying suppliers, that grew by 1%, whereas the total supplier grew by 6%. So if we analyze that thing, that more and more suppliers is coming, but they are not wanting to pay the money. So that is the thing. And if IndiaMart can do any kind of like thing, like advertisement, like that, if they can able to convert this kind of like customer relation to the real customer. Okay, so because from these customers, from this supplier who joined IndiaMart in last 1 quarter, they will be in some point of time they will pay some kind of a fee to IndiaMart if they can able to get some business from IndiaMart. So IndiaMart should look at those suppliers also, that how they can convert those suppliers to paying supplier. Okay, so that is the thing. In terms of the revenue, this quarter they grew their revenue by 12%, which is pretty low. And if I look at the trajectory of the revenue growth, every quarter for last 2 years, every quarter is like it is coming down quarter after quarter. Like 2 years back they were growing at 30%, like in 2023, okay, and now the growth have came down, the growth came down to just 12%. So that is the thing, that is not a good thing, that is the thing. And Indiamart, if we talk about the management, what management is saying, that they started to invest on the online platforms, on Facebook, on Instagram, that they have started to invest on the advertisement, okay, so that the buyer base increase in the future, to increase the buyer base. So that is the thing Indiamart is doing that, and I think they should do that, because if they do not invest in advertisement in the online platforms, so how they can reach to that buyers, okay, because everyone do not know about Indiamart, everyone, and we also do not expect to everyone know about Indiamart, because it is a B2B marketplace. So if Indiamart can improve their buyer base, then yeah, that is good, so that supplier also will get more and more business from Indiamart, and that will be really good for Indiamart, because if the supplier gets any kind of business from Indiamart, they will be encouraged to pay the fee and get more business from Indiamart. So that is the thing. And in terms of the EBITDA margin, their EBITDA margin for last 1 year is pretty stable at 30, 35, 40%. So it is a really good number, that 35% of EBITDA margin, and the EBITDA margin is stable at 30-40%. So that is also a really good thing. In terms of the PAT, they grew their PAT by 34% in this quarter, and in terms of the operating leverage, they are getting the operating leverage, because it is a platform business at the end of the day. So all the cost is there. All the cost means the cost is over, like they have to build the app, they have done that, all the things are there. So yeah, they will continue, like maybe not in a very big manner, but they may continue their operating leverage in the future also, and they are getting operating leverage for like last few quarters. So that is a really good thing, that they are able to expand their margin, because if I talk about their past, 2 years back their PAT margin was at 25-30%, whereas now the PAT margin is at 45-50%, okay. So that is the thing, they have been able to improve their margin, and as I said, that they are getting the operating leverage. But again, how much operating leverage they will get in the future, that is a question that we have to analyze. We have to track the company, that how much operating leverage. But the main thing is that how they are getting the revenue growth. So that is the thing, because like if a company is growing their sales at 12%, okay, if I calculate India's GDP growth plus the inflation, that is at 13-14%, whereas if a company is growing at 12%, growing their sales at 12%, why I would like to invest in that company? For me the minimum filter is a company have to grow at minimum of 20%, okay. So that is the point, and that is the point. So in terms, if a company do not get the revenue growth, if the company is unable to get the revenue growth, then how much they will increase their margin, how much they will improve their margin. And that is why I am saying that in the future also they may get a little operating leverage in next few years. But again, if the revenue is not growing, then because if you have to understand that margin expansion there is a limit that how much margin expansion you can do. So that is the thing we have to understand, that if a company is unable to grow at 20%, why I would like to invest in that company? Because in the market, if you analyze, if you look at all the companies, there is multiple company who are growing at 30, 40, 50%. So that is the point with Indiamart. Okay, that is why you also can see that their stock is not moving from last 3 years. So that is what I am talking about. And if the incremental growth do not come in this business, then the stock will remain in that range only. So that is the thing. And the PE also, PE is at I think 30x PE they are trading. So I think for a 12% revenue growth company, 30% is enough. I think I do not see any kind of a expansion in expansion in terms of the PE. Yeah, if they can grow their margin, if they can improve their sales growth in the future, then it is okay. But till then, the opportunity is not very good with Indiamart. So that is the thing I want to share. So that's it for the video. Thanks for watching.